What is happening, best ever community? This is Matt Faircloth, and I am your brand new host for the best ever CRE show. Now, you guys did not tune to the wrong podcast. You are not on the wrong channel. You are on the correct channel. This is the best ever CRE show, and I am your brand new host of the best ever CRE show that will be bringing out episodes to you guys every Friday. And how lucky am I to be here with you guys, to be talking real estate shop with you guys on a weekly basis. I cannot tell you how grateful I am. So stay tuned, buckle in, put your podcast seatbelt on, because we're going to be doing some phenomenal conversations every week here on the show when I am the host. Brian, how are you today?
Great, Matt. How about you?
I'm good, man. I'm really grateful. So Brian and I traded a few emails about this, that if you want to hear Brian's resume and all about Brian's past as a real estate investor, you can go ahead and listen to one of the other hundreds of shows that he's been interviewed on, because that's pretty much the same show over and over again of him talking about his past as a real estate investor. We're not going to go there today. I'll just tell you all real quick. Brian is a juggernaut. He's a machine. He's built multiple billion-dollar real estate businesses, hundreds of fix and flips in real estate investing, thousands of multifamily units. The rumor on the street I heard was there's over 4,000 multifamily units. And Brian's also built and sold a real estate private lending business. Brian, did I miss anything? Do you also own like a title company or a brokerage or anything else I've forgotten there, or no?
Just a brokerage, but who knows? There might be a thing or two mixed in there somewhere.
Yeah, Brian's got so many businesses, he's forgotten about the businesses that he has and all that. There are plenty of misconceptions of our business as real estate owners, right? There are things that people think are extremely easy, but are not. And there are things that people think are very hard, but are not, right? What are some of the misconceptions about real estate ownership or apartment build? Let's start with apartment complexes. What are some of the misconceptions with apartment complexes that are out there on both sides?
Well, I think one of the misconceptions is people think that apartment buildings are easier because, there's only one roof to fix, there's only one lawn to mow, and that's easier than single family homes, right? But, then on the flip side of it is, as a beginning real estate investor, every single beginning real estate investor can buy a rental house. Every one of them. But not every one of them can buy a multi-unit apartment building, because the multi-unit space is so relationship driven that when you go to the broker and be like, I want to buy this 10-unit building, they're like, okay, well, we got 4 offers, tell me what you've done and are you going to be able to close? And that problem gets worse the larger the property gets. If you're going to buy a 500-unit property, you're going to have a hell of a resume for that broker to even bring you that deal, but B, to get awarded that deal, because there's going to be other buyers with a big resume that are going to be wanting it too. And the most important thing to the seller is certainty of closing. Yes. So as the larger the property gets, the more your reputation, the more your skill set, all those things are going to matter. So people think that getting a bigger apartment building is easier to run, but the flip side is that they're harder to get. So, you have to work a little bit harder. So there's a lot of little misconceptions. That's just on the getting the deal side. Then once you have it, now things get really different, right? Now, especially the larger the property, when you get a 50-unit building, you think, well, a 50-unit building is going to be way easier to manage than 10 rental houses. Yeah, but a 50-unit property is large enough where you need to actually have a staff. This means you need to hire people, and you have employee issues and all of that kind of stuff. And a 50-unit property is so large, you can't run it on its own, and it's so small, you don't have enough revenue to get top tier experienced employees. So now you're in this kind of in-betweener where they're really, really difficult to manage. Like a 10 to 50 unit building is probably the most difficult space in all of real estate, because you've got to have all these things, and there's not enough revenue for all those things. Single family homes, you don't need all the things, so you don't need all the revenue. But then when you get bigger, it does get easier. But getting bigger requires so many prerequisites that you have to survive through all those other things to get there. And
Would you buy let's say somebody's scaling. One of the best ever listeners right now is listening, right? You know, and they're trying to scale, and they're targeting, 20, 30, 40, 50 unit buildings. Number one, would you buy a building of that size? And I get, as you were scaling up, looking back, would you skip that asset, that size, and jump up to the hundreds where you can have on-site management and, a lot more people? Or would you engage in those mid-range, those tweener units? And if so, how would you handle them?
I absolutely would not skip that. It's kind of like we say, like, all right, you were born and you can't even get out of your crib. Can you go run the 100-meter dash? It's like, well, no, first you have to figure out how to get yourself up on your hands and knees. Then you have to figure out how to crawl. Then you have to learn how to walk. And when you first learn how to walk, you're wobbly and holding onto tables and all this other stuff. You've got kids, so you even know this better than I do, because I don't. But you've experienced this, right? You've seen them as they've grown up, and when they could barely even support their own weight to, pretty soon they could run a 100-meter dash and probably outrun you. So you have to do the same thing in real estate. You have to survive through those more challenging things like the 10 unit, the 4 unit, the 10 unit, the 20 unit, the 50 unit. If you make it through those, you'll make it in 150 unit properties.
Oh, yeah.
But if you fail at running a 30 or 40 or 50 unit deal and you get into a 150 unit deal, there's this old saying that people think the grass is greener on the other side, but you're still the same cow, right? So you have to be able to learn, and it's like there's another saying: the bigger they are, the harder they fall. Yeah. And you're gonna make mistakes. I call this the rookie mistake phase of your career. You're going to make mistakes, and when you do, and you do fall, it's a lot better if you're falling a short distance with a smaller property, that a mistake that you can recover from, pick yourself back up, dust off, fix it, make it right, and carry on. Then you've got this, $30 million deal, and you've lost everyone's money, and you find yourself in prison.
Yeah. That's no good. Nobody wants that, best ever listeners, do you? Right? So let's not do that. Going back to the tweener unit, right? I want to get some guidance from you, because though there are many, I would suppose best ever listeners here that are in that size, as I was, as you have been as well, in the 20, 30 unit range. What is, looking back now, knowing now what you maybe didn't know going into it, knowing what you know now, what's the best way to attack a 20, 30, 40 unit that might have a managerial problem? You can't put on-site management on it. It's going to be a bit of a pain in the ass, because it's kind of that middle tweener size, right? What's the best way to attack something like that and to pull it off profitably, looking back on it from what you know now?
Well, now is the time to try this, because if you're in a really hot market, and you buy one of these tweener deals, you're probably going to fail, because the market's going to tank eventually, and even tanking could be different definitions. A minor tank of the market isn't going to really produce great results for you. So you want to buy them at the right time in the market where you can ride the market up. That's now. Okay. So I think if there's opportunity in the market today, the market is in smaller multifamily, because this is where you get those, tired landlords and, people that need out, that kind of stuff. There's deals to be found in the smaller multi space. And
mom and pop owns a lot of smaller multifamily.
Absolutely. Yeah. So there's deals to be found in that space. And we're kind of approaching the bottom of this kind of adverse real estate cycle. And when the cycle turns and starts riding up, you can ride it up. And those tailwinds are going to help you a lot in the smaller multifamily space, because it's hard to create a ton of value, but the market can push you to larger values as you create the value that you're able to create. And you can exit those things really, really nicely. So I would recommend this is the place you start. If you I started, here's how I did it. I did single family homes. I did a couple dozen single family homes, both rentals and flips, before I bought my first apartment building. My first building was a 16 unit. I did it with a 1031 exchange by selling some of my rental houses and buying the apartment building. But I didn't have enough money from the proceeds to take the thing down myself. So I got the seller to carry back 10% of the purchase price.
All right.
So, you can get away with that kind of stuff in smaller multi, because there's owners who are like, yeah, I'll still get to collect some monthly payments. That sounds good to me. You can buy it with less money down. The lenders are a little more forgiving with having subordinate debt in that space than they are in the larger space. So that's how I got into it. And I fixed it up, refinanced it, paid off the seller carry with one loan that was with one bank. And, I kept that property for 15 years before I sold it. You don't have to keep them that long. I still own an 11 unit that I bought 20 years ago. I still do, believe it or not. Yeah, I still do. So there's a lot of opportunity in that space to grow yourself and grow your business. Now, when I first took it over, there was a management company that was in place. I kept the existing management company there. It took me about 6 months to realize they weren't really doing a very good job and that I could do a better job. And I'll hire my own on-site manager and give him a free apartment, and he manages the whole thing and I just oversee him. I found out how difficult that was when you start losing managers and they're not very good because you can't pay them anything, right?
I tried that. That was a bad idea.
It was a terrible idea.
Have you ever made that work?
No, absolutely not.
The on-site super idea. Guys, best ever listen, don't do that. Me and Brian forbid you guys from doing the rent credit or on-site supervisor position. So Brian, I bought a 49 unit a while ago, and there was an on-site super like that. And she was in charge of leasing and also managing the complex. And magically, all her relatives lived in this 49-unit apartment building. Her son's out there on a couch smoking weed out in a field right next to the building and stuff like that. And I'm like, what is going on here? And I realized all the bad apples in that apartment complex were correlated back to some relationship with her. And she was the gatekeeper of, if she didn't like you and didn't like whatever it was, she was able to, in essence, discriminate, on who could live or who could not live in the apartment complex. She would let certain people she liked go a couple months on not paying their rent sometimes, and then other people she would recommend the owner filed eviction immediately, right? So it was my cats away, mice will play kind of thing. I'm sure you got plenty of similar stories as well. So best ever listeners, do not let a site super live in your apartment complex for discounted rent. There's too many ways it could go downhill, and just hire a third party pro management company. Correct? That sounds good, right, Brian?
That's right. So I had the third-party management company. I thought I could do better. I tried, and that didn't work. I learned that I couldn't do better, that professional property management is a difficult business. Yeah. So I hired a different third-party professional manager, and they actually turned the place around and did a really good job. So, so I would say affiliate yourself with some really, really good third-party property managers. Spend some time to find them and vet them and pick the highest quality. Do not go with the cheapest bid or whoever's going to charge you the least percentage. You want somebody that's going to be really, really good and take care of your property as if it was their own, and they can make or break you. And you'll learn all kinds of stuff along the way, and that stuff is going to be really valuable to you as you grow your business. And that to me is a really good. People say bypass all that stuff, go straight to these larger buildings. I think that you get your best education